Oil and gas, is this the time to buy now? Udo, welcome back. Oil and gas, is it time to buy?
Yeah, we think we come very close to that moment. And it's not just Merrill Lynch, since the financial crisis, subsidiary of Bank of America, who just raised the sector from equal weight to overweight. We think the oil price, after a tough correction to nearly 25 and a doubling the price to 50, now we have a back test of the $40 and now coming back nearly to 50 last couple of days. We think technically prices are improving, but also the last couple of years there were lots of projects taken out of business, and we see later on lots of rigs being closed down, and the fundamentals are basically improving for oil and as well for natural gas.
Okay, great. Natural gas, crude oil. Why is gas maybe a better choice?
Natural gas is not that much connected to the, I would say, to the economy or to the strength of the economy than oil. Oil is used about 60 or 2/3 of oil is used for transport, so it's a good indication how good the economy goes. And natural gas is more with heating and production of electricity. And that's also sometimes a question of temperature, which we had before on the food side. So, and if you look at the technical picture of natural gas, that's a really robust bottom, is there, like a reversed head and shoulder. And now we are really, I think, all above major support levels, and natural gas still looks good, actually. And the fundamental reasons for natural gas are, on the one side, it's increasing usage of electrification, because we use a little bit less nuclear industry and a lot less coal. So that's going to be replaced through natural gas. And there's also a strong inventory buildup. I don't know if they expect a strong winter, but first time in 10 years you saw that July drawdowns, the inventory buildup was extreme in the natural gas sector, which, of course, supports prices. And the prices in the US are still, I would say, ridiculous cheap. They are about $2.5 to $3. They're about $8 to $10 in Europe, about $18 to $20 in Asia and Japan. So I think it makes perfect sense that the US will one day start to export natural gas.
Okay. And the rig count, you already mentioned that a bit.
Yeah.
Why is the rig count so important? What does it say?
I think it says about it says one thing about how high the oil price is. The higher the oil price, the more rigs gonna produce, and the lower the oil prices, the less has to be closed, because they produce too inefficient or too expensive. And lots of rigs have been closed. I think in the US from the peak from 2014, about 37%, but altogether I think even more, up to more than 70% rigs. And if you look at the total US rig count at the moment, we are around 488, 490, which is at the lowest level last 30 years, which we had in 1990. So I think there is probably shortness to be expected in the next couple of years, as production is coming down very fast, and demand is, thanks to Asia, India and China, still quite growing, not as fast as before, but still growing. So I think that still speaks for natural gas and oil. But natural gas, you see on the next slide, how the prospects for US export looks, and there's just now starting. And on the one side you have LNG, liquefied natural gas, through tankers to Asia, to China and Japan, but also through pipelines to Mexico and south to the US. And that's going to support the gas price, natural gas price, I think, for the future years to come.
Okay. Let's come again to your fund, of course. Neste Oil. Honestly, that's the first time I hear about this company. Why have you picked that for your fund?
Neste Oil is, okay, I must say, it's not a typical natural gas producer. Neste Oil is, they claim, the world's biggest biofuel producer. They are based biofuel, in Finland. It's produced out of waste and residues from cooking oil and plants and forests. And they produce nearly 150 million tons of biofuel. They could maybe support the whole Finnish, I would say,
truck fleet.
The next 2 years.
Wow.
So they are really successful in this market, and you see the price chart, how they outperform the European stock market, and also of course all the energy stocks. So they have been a really successful investment for our part, and you see that even in the energy sector there are sustainable companies around, but we have the same attitude as most of the sustainable funds. We try to find the best in class kind of. And that's the next story as well. For example, in the US, Continental, we think they had a strong correction as well, but now a nice rebound coming back to life. And they have a very, I think, interesting technology where they can put rigs together so that save energy, they save kind of waste, and they make it more fuel economy, the whole production of natural gas, very efficient way what they do. And I think sooner or later, when the energy prices continue to go north or continue to recover, I think that advantage what they have in the technologies that will help them even more. Actually.
Okay, fantastic. So our last slide here, energy and metals S&P 500 sector.
Yeah.
Well, what's the matter with the 200-day moving average here?
Yeah, they are both, the materials and energy, both important sectors for our fund. They both now had nice recoveries. They both trade above the 200-day moving average, which is kind of important, kind of supporting the uptrend now again. And especially on the S&P 500 indices in the second quarter, the energy sector, they had the highest surprise factor on the positive side as well as on the earnings and on the revenue side, which kind of supports that they are coming back. I have to state they're still not really cheap. They didn't, all of them did come down. So on the forward P 40, they haven't been so cheap as they have been before. But I think on the study what Merrill Lynch was saying, there has been never a time or nearly hard a time when the oil price recovered more than 25% that the sector of energy didn't outperform. I think 9% of the time, the next 3 years, energy sector outperformed. And you know what? I think it's for us time. We were really heavily underweighted this sector last 2-3 years, which was good. But now it's time to have a close look at it again.
Fantastic. That was a very good final sentence. Udo, thank you very much for that, and all the best with it.
Thank you. Thank you.
Thank you. Ladies and gentlemen, that was Udo Sutterluety, the fund advisor, together with his partner Connie Moore in London, from Sunares Sustainable Natural Resources Fund. And yeah, gas, oil is back in the game. I'm your host, Johann Steiger, Commodity TV in partnership with Dukascopy. Thanks for watching us. Bye-bye from Geneva.